The hook is real. Many in the middle class are overpaying the IRS by thousands of dollars every year. Today, we break down exactly how to stop doing that. Welcome. If you feel like you are working harder just to stay in the same place financially, there's a reason, and it's built right into the system. The U.S. tax code wasn't necessarily written for the super rich to pay nothing. It was structured perfectly to keep the middle class right where they are, maximizing their tax burden. If your household income falls between $60,000 and $150,000, you are the most susceptible to this trap. You might be overpaying the IRS by up to $4,000 annually. To help you claim that money back, we're going to cover 3 specific strategies: maximizing your HSA, choosing between a 401k and a Roth, and utilizing legal deductions from a side hustle. Our first strategy focuses on an often overlooked tool for tax-advantaged savings, the Health Savings Account, or HSA. The HSA offers a powerful triple tax advantage. Your contributions are tax-deductible, the money grows tax-free, and withdrawals for qualified medical expenses are also tax-free. For the middle class, maximizing HSA contributions is a massive win, allowing you to invest and grow your money completely tax-free, a benefit typically only enjoyed by high earners. Next, let's tackle a retirement planning question that significantly impacts your current tax bill. Should you prioritize your pre-tax 401k or an after-tax Roth IRA? Traditional 401k contributions are pre-tax, meaning they reduce your taxable income now. Roth contributions are after-tax, but your money grows tax-free, and withdrawals in retirement are also tax-free. Since you are in the middle income bracket, maximizing the tax deduction now with the 401k is usually the most beneficial strategy to lower that current $4,000 overpayment. Finally, we come to a strategy that the wealthy have leveraged for years, using a side business to create legal tax deductions. Simply setting up a legitimate side hustle allows you to reclassify personal expenses as business expenses, legally shielding some of your income from taxes. Common deductions include a portion of your home office, internet, phone bills, or even vehicle mileage, all expenses you already pay for, but can now legally write off. Understanding these strategies is the first step, but implementation is what truly matters to stop the middle-class tax trap. Remember the 3 areas: maximize your HSA, prioritize the tax deduction of your 401k, and start a side business for legal write-offs. These 3 actions are your key to clawing back that $4,000 you might be overpaying and finally breaking free from the middle-class financial treadmill. If this video helped you, please like, share, and subscribe for more financial insights. And let me know in the comments, what is your biggest question about advanced tax strategy?